To say it has been a fun 2024 is an understatement. We have accurately predicted artificial intelligence, semiconductors, and cryptocurrency would do very well this year. The fun looks to continue. Our mantra for 2024, amidst predictions of bear markets or bull markets, both will miss the mark this year. In 2024, success will hinge on stock selection, with most gains driven by a select few mega capitalized companies. If you find yourself in those companies or sectors, you're poised for a good year. Notably, last year, significant gains were elusive for those not invested in the Magnificent Seven. The artificial intelligence sector, particularly in semiconductor, is poised to lead the way in the stock market this year. If you are invested in this sector or explore companies supporting it, significant rewards could be in store for you in 2024. Our past track record on this channel in 2022, our recommendation was to short the market. In 2023, we told you to buy on dips. In 2024, we're telling you artificial intelligence, semiconductors will lead the way, and stock selection is the key this year. As we look ahead further into 2024, you must understand our bold predictions. One of our bold predictions revolves around the multitude of elections taking place globally. Approximately 40 countries are set to hold elections this year, with the United States being one of the most influential, also gearing up for its elections. These elections are anticipated to bring about major policy changes and increase geopolitical friction extending from Washington, D.C. to Taiwan. This year marks a historical high in number of elections worldwide, with 41% of the global population set to cast their votes. The economic impact is substantial, affecting a staggering 44.2 trillion of GDP. Additionally, elections on the horizon for European Parliament, adding another layer of significance to the global political landscape. These elections will have potentially bullish outcomes tied to before the elections and maybe a few months after elections, but the following year will have major ramifications on the world stage. Understanding why this year is expected to be bullish on a global scale involves delving into the presidential election cycle theory. Developed by Yale Hirsch, the founder of Stock Traders Almanac, this theory posts a predictable pattern in equity returns during each new U.S. presidential term. According to the theory, U.S. stock markets typically exhibit weaker performance in the first year of a presidential term, subsequently the recovery and reach a peak in the third year, only to experience a decline in the fourth and final year. This cyclical pattern then restarts with the commencement of the next presidential election. So we are in the fourth year and right before election, which last year was a very good year, which is typically correct, and this year, the markets will also be up also. But it goes back to what we said, this will be a selective market, and AI, crypto, will hold these markets up. The election cycle theory is based on the idea that shifts in presidential priorities exert a significant influence on the stock market. It suggests that markets tend to perform optimally in the second half of a presidential term, when the incumbent president aims to stimulate the economy for re-election purposes. Historical data from the past several decades appear to support the notion of a stock surge during the later half of a presidential term. Another bold prediction we have is that a news story is anticipated to emerge, triggering substantial gains in the stock market within a single day. This story is expected to continue influencing the market positively for the next few months, propelling overall index higher. The nature of this news story could range from positive information about the semiconductor industry to favorable updates about the upcoming presidential election or any other impactful news. The mass media is projected to amplify and build upon the information, contributing to sustained market momentum. This phenomenon underscores the market's sensitivity to significant developments in the media's role in shaping investor sentiment based on emerging narrative. It goes back since we've been telling you for a year and 3 months, but especially this year, artificial and semiconductors will lead the way. This trend will not be everlasting, but it is expected to persist at least for the intermediate term. Remember, over the past year and 3 months, our unwavering recommendations to include QQQs, semiconductors, and particularly Nvidia in our portfolios have yielded significant rewards. Today, we reiterate our stance on Nvidia, AMD, and ARM holdings. As we speak, the market is pulling back before federal announcements tomorrow. You know what we have been preaching for the last year and 3 months. On dips, we buy. But now this year, we're even more selective, and we've come down to 10 stocks that we are buying. And you know the spoiler: Nvidia, AMD, ARM Holdings, AMAT, QQQs, SMHs, the Semiconductors ETF, Bitcoin. We believe for the intermediate term, these companies, these sectors will hold up this market, with Taylor Swift adding an extra bonus. The Taylor Swift was a joke. This video is called The Mantra, and the mantra is artificial semiconductors, QQQs, and cryptocurrency. Disclaimer: the information provided on our channels for educational and informational purposes only, is not intended to be a substitute for professional financial advice. We are a top-down approach investors. We are looking at the big picture. Our trading edge is to use historical, analytical, and technical analysis to give us an investing edge. When we make a decision, we have a probability of succeeding because of back information and analytical information. We are consistent in our approach. And as you know, we are a rule-based system. We have empirical, theoretical, and psychological information and rules that we use to invest. One of the videos that we have done is Build Your Own Rule-Based Strategy, Volume 1, Issue 1. We have also come up with some bold prediction videos which will help you make a decision of which direction the overall market's going and which sector is moving upwards. We have a weight of evidence where not all indicators work good at all times. We have seen recently that overbought, oversold indicators have not been working well. And that's usually the case in a market that is bullish and that is held up by a few companies. We have a three-part process. We look at the overall market, which we are bullish on. We look at the sectors. We don't have to say the sectors that we are most bullish on: semiconductors, artificial intelligence, cryptocurrency, NASDAQ 100, and the individual securities that we're looking at: Nvidia, ARM, AMD, AMAT, Bitcoin, Ethereum. We are right now bullish intermediate term, bullish long term, and today we are short-term neutral, expecting a pullback. Remember, we are a data-driven approach to maximizing success. Our investment philosophy is based on consistent weight of evidence, rule-based decision-making, and a top-down approach. By utilizing analytics, data-driven insights, and technical analysis, I focus on maximizing the probability of success in my trades and investments. Furthermore, risk management plays a crucial role in my approach, allowing me to navigate various time frames, including short, medium, and long term. We are building a system with a set of rules that guide your decision-making process. We use a weight of evidence considering multiple sources of evidence. And most importantly, we are consistent. I have not changed my approach each day, each week. Our approach remains the same. For our long-term portfolio, on January 18, 2023, we have told you to buy the QQQs. Right now, the QQQs are up 56%. And some of the leaders that are holding up the Qs have changed from last year, which we have seen change. We are still a whopping up on a one investment of 56%. Not telling you what we did off Nvidia, ARM, AMD, and AMAT. But let's go over the reasoning why we're still bullish. S&P 500 securities, 60% are still bullish. That means if you pick and throw a dart in the S&P 500, 60% are in a growth phase, as well as the NASDAQ at 55%. The majority of stocks are moving up, and this is very healthy. We are inevitably going to have a pullback, which we've been telling you about, and this pullback is healthy. The trick is what you're going to buy and when are you going to buy it. And if you subscribe to this channel, we'll give you the heads up when we are further buying into our short-term position with a sell-off today. Thus saying that we are not shorting into this market. Why are we not shorting into this market? Are all indices in a bull market? Yes, they are clearly on a bull market. No one will tell you that we are not in a bull market for the last year and 3 months. They will tell you we are overbought in this market, but they will not tell you we have not consistently went up for a year and 2 months. Thus saying that, we use oversold indicators and overbought indicators. The overbought indicators have not been working well. Thus saying that, it's not to throw it out the rest of your life, but it seems like in bull markets, in markets like this, some oversold RSI, stochastics, and pullbacks have not been working very well. In fact, slight pullbacks have always been the time to buy in and buy in faster. We are looking for pullbacks maybe in the QQQs to around 420 to 425. On any types of dips, we will be buying and we'll be posting videos. Is the QQQ a cheap trick? No. QQQ is clearly on an uptrend, and we always prioritize uptrends. Let's continue further. If you look at the VIX, it is clearly in a neutral position. For us, if you look on a 50-day moving average, we have gone nowhere quickly. And if you look over here, we have quickly stayed in a range. Again, these are more signs of bullish indications. And the next few days, if we sell off more, we will clearly move in further in the short term and build more positions on our intermediate term. Clearly, we have been right for the last year and 2 months, 3 months, telling you to buy on the dips. Nothing has changed. The only thing, it is more selective. Our short-term indicator, which worked very well last year, has not been going to extremes of 100 or 0 and is in a sort of a trading range from 50 to 75. If you look at the Commodity Channel Index, CCI, it is again giving many neutral indicators right now, but we feel a number touching 0 is more a probability than going down to a number that touches minus 200. So we'll be first looking to see if the weight of evidence comes clearer when the number hits 100. I don't expect the number to come to minus 200, which we have been telling you the last 4 months. Again, overbought, oversold indicators, neutral. If you are using just overbought, oversold indicators for the last 3-4 months, it has not been working well. No matter if you're looking at short-term, medium-term, and long-term, it is not giving you a clear indication. And when it does give you a clear indication, the sell-offs are very little and it doesn't go to 0 very often. What has worked very well for the last 2 years, components oversold, overbought, has been neutral for the last 2 months. We will always come back to oversold, overbought indicators, but these indicators have not been working well for the last 4 months. Thus saying that, that's not to throw them out, that's just to fool the knave. If you look at the Magnificent Seven, which we keep buying on any type of pullbacks, we're starting to see troubles. Apple, Tesla, and even Google have not been looking good. And specifically, Apple is foreseeing what could happen in the future if Apple does not turn around. But thus saying that, Nvidia has been the rock star, which we have been in. Meta has been great. Microsoft and Amazon are still holding up. Thus saying that, with 4 out of the 7 looking positive, we are still on the QQQs, a bullish, long-term, intermediate term, and soon will give the indication for a short-term buy. Why are we having a pullback today? AAII market sentiment. Clearly, a lot of investment professionals are bullish. We are at extreme greed in put and call options. But most importantly, the RIDEX ratio, which has nailed the tops of the markets before a slight pullback and then an upswing again. And also the stock price strength, which is at extreme greed. In conclusion, we are bullish on this market. In conclusion, we will be coming out videos of our favorite artificial intelligence companies, included also semiconductors and cryptocurrency, and a few new brand new rockstar securities you should be investing in. You know the catchphrase, study it, analyze it, adapt it. Peace.